Going into Tuesday, the big question into CPI is, can we follow this continuation? Can we continue the run that we've had? If we look at expectation, what the market's looking at here, you have to take it as a sense of they're expecting continuation. And when I say the market, I have to say big money, if you will. But there's a giant red flag that what we're seeing in comparison to previous moves that we've had. And this definitely caused me to have a little bit of concern in the market. Now, again, going into tomorrow, obviously CPI. You have your core and your normal CPI. I believe core is more fundamentally important, and that's one we should be focusing on. But the one you're going to really be watching, whether year over year or month over month, is going to be your month over month to see if that continues to increase, because that shows increase that will be concerning for me and the overall outlook of the market. So I just want to let everyone know that, be viewing that and be ready for that. Now, before we go any further, when we're looking at these charts and a lot of these, I have to tell you right now, consider liking, consider subscribing. Every single day we pump these videos for you, so you are prepared, unbiased, straight to the point. Now, again, I'm going to show you the winners and I'm going to show you the losers, right? That's the focal point of this video, and the focal point of the channel is to get you ready for the market every single day so you know what to expect. And it's also to really promote transparency in the market so you can learn while you're going. Because the most important part of day trading or understanding how to trade is understanding how to lose. Because if you don't know how to lose, you won't know how to manage your risk to reward, you won't know how to manage your losses, and at the end of the day you will not be profitable. That's at least my opinion. I also recommend you follow on Twitter so you get the daily updates, you get the threads, you get everything in between, you get the charts. I posted this earlier for y'all. Microsoft, it was absolutely gorgeous. Clear bull flag, broke to the upside. Posted it for completely free on Twitter, so y'all were ready. Boom, went straight up, made about $700 in that trade. Posted it all on Twitter so y'all could see. That was basically the only trade of the day with Apple. Now, when we get back to this, I have to tell you, you look really good technically speaking, but technicals go out the window at 7:30 a.m. Central tomorrow, because an hour before market open, you're going to get your CPI report. And I don't care how good you look, but if we just take a second and take a step back to on the 2 hour, the 4 hour chart, I'm going to tell you right now, it's not the worst looking chart. Okay. It's not that bad, because if we look here, in my opinion, you are trying to make a daily, yes, I said it, a daily bull flag, if you will, here on the Nasdaq, here on the ES, here on essentially all frames of the market. It looks like you're prepared for continuation. So I'm going to tell you right now, at the beginning of the video, right now, you don't even have to watch the rest of the video. You can click off after this if you want. Tomorrow, if we come into the CPI and we get any type of beat, so let's say hypothetically this goes lower than expected. So we come out at 6% on year over year, and then we come in around 5.4% year over year on core. If we start to drop and the month over month comes out flat, just flat, and everything else starts to drop, if that comes in my opinion, we will see a lot of upside. I think right now, the major concern are these revisions that we have faced. And that's what leads the most clouding of my judgment when we're looking at the markets right now. I have to say, based on those revisions, will we be calculating inflation differently this month? And does it give us room to drop? And that's the concerns for me right now. And I can't give a definite answer, or at least a confident answer like I've been able to give on the previous CPI reports. Now, right now, what I'm going to tell you based on this piece of evidence for me, it's volume. And again, when you come to the channel, it's unbiased as always. And I think that I've been very bullish lately. So when I tell you this, just know that my majority sense tells me I'm wanting to see continuation. However, if we look at the markets, what's been happening on these downside days we've been talking about, what have I hated? It's the low volume over and over. So to the downside, low volume, right? Now today, with this price action to the upside, even on SPY, so SPY opens up down here, right here, you gap up a little bit, and then you just go up all day long from basically 408 all the way to highs of almost 413. I mean, how can you complain with that type of movement? But then you look at what happened here, and there was no real buyers out on the market. There was no real buying pressure here. But I can also say there wasn't really any big selling pressure, because as we look at Bookmap and giving you just a little bit of a visual here, you can see that we basically didn't have any major levels, if you will. You can see as of the morning, and this is just showing you a visual of level 2 data, you slowly grind up, but there's no big resistances from sellers. You have a minor one here around 41.20, you blow past it, consolidate, and it's just over and over. Your only big level really was around 41.30, and again, that was taken out with some ease. And we can see then buyers start to come in here and give you support, and you continue to bounce and bounce and bounce over again to these local highs. Now, we did get a little bit of selling from this high here. We could argue this is where the most sellers were on the day, around 41.50. But again, you come back down to that 41.30 support we saw back here, and you bounce right back up to it. So when I look here, what does this tell me on the market as far as volume? This tells me that we're not getting a lot of selling pressure, and there's not a lot of sellers even on the market to show any resistance right now. However, that leads me to believe that one, we're either trying to price in some good expectations from this CPI reading, or possibly getting a sort of trap just on this day. And if anyone wants to know what a trap could possibly look like, this is what it is. It's not, this is not a trap right here. This is a month-long just trend flip to the upside. That's really strong, okay? Now, if we go to like something like the 4-hour and we look at this volume, this could be setting you up for a trap, okay? This could be setting you up for a bad data reading coming from the CPI. And again, right now, I'm going to tell you, going into tomorrow, completely honest, totally liquid. And that shouldn't surprise anyone because I tell you every day, you want to go into these readings liquid. That's your best friend and best set and best possibility for coming out successful is to look what happens and then react to that news and then trade the trend that's given to you. Now, if we come here, we can see one, we pushed up, had one of our better days for SPY in the past few, maybe even past week, right? Pushing up, no real downside during the day. Okay, you hold up. Now, when we look over at cheddar flow and look at the options flow on top of this, we can see the biggest orders on the day. We'll come back to SPY. Let's look at Qs. The biggest ones, you have some blocks coming in here. These are next January, so I'm not too concerned about this one. This is a short dated one, 315. That is a little bit interesting, but I have to say they're probably just strangling these positions here. That would be my opinion here. But what you want to say is that they're definitely feeling a lot stronger to the bull case based on these orders, based on the price. So I will say that. Okay, that's what you have to be looking at there. And you can get a good idea based on when these orders came in. So this order, as you see, came in right here. But within 10 minutes, they came in at the same time. So it makes me believe possibly the same buyer there. Just going to say my opinion as we look at that. So when we go a little bit further, we get a little visual of the SPY. Now, I will say Qs have led the market. So seeing a little bit of strength on Qs makes me say, okay, maybe we're expecting some upside. But we come into SPY, and it's just all downside. Primarily, the focus is short. And then when we look on top of this and we look at that volume, it makes me say, okay, maybe big money is preparing for this downside thesis. We've also seen the options flow when we look at in the money positions getting rolled out further. So a lot of those were set for March, and they've been getting rolled out to like June and a little bit more dated than that. But we're not rolling them out to like September or anything crazy. So you need to be identifying what's happening there in the options flow, because sometimes that's a way they kind of sneak it in there. And when we look here based on volume, I'm going to tell you this is the easiest we've had to push up. You're going to end the day probably under 55 million volume, which is astronomically low. Straight up some of the lowest volume you're going to have. So that's why I say right now, when you're looking at the market, all TA needs to go out the window. Okay, for the time being, throw it out the back door, because I'm telling you, CPI is all that matters. And right now, with what we're having from CPI and these expectations from this, I'm telling you, the revisions could bring anything. And these revisions, we're not going to have any revisions. And this was a question on the last video. Someone asked, well, what is stopping the market from giving you a CPI report and then coming out with a revision, next month on this report? The only reason they're doing these revisions because they're changing the way they calculate CPI for this year, right? Going forward, they changed it. So previously they were calculating the past 2 years. So all you did was go back and revise the past CPI reports that we had. So that's what they're doing right now. So they're not going to be doing revisions again, or at least they should not be doing any more revisions based on what the Fed has said. Okay, so that's what we need to understand here. And they've been pretty good about when they say something, they stick to it. Okay, so I want to be very clear on that. So that's my expectations here. But again, I want to say, technically speaking, you'll look decent. However, again, I'm going in non-biased, sitting on the hands, waiting for this viewpoint. I'm telling you, after tomorrow, we'll have a clear path. We'll be able to easily look at these supply and demand zones and very easily be able to construct trades based on that. It's going to be very simple. I think right now you're just setting yourself up to fail if you're forcing these types of trades right now. That's my opinion, and that's just what I'm doing right now. Now, giving you the supply and demand, I'm going to do it just in case so you can have them. Now, when we look where we're at, I think your areas that you need to be watching for, we're going to go to the 2-hour time frame here. Clearly, your supply is to the upside around 12.65 up to around 12.72. Now, to the demand, the bottom side, I believe we have tried to make a new demand here. So if we come out, we can draw it really quick so you can see it really be around this area to here to here. And this would be your demand here on the 2-hour. I'm going to tell you right now. But then you also have another major support around 12.1. So you can see we're building support on support. And if we also look where we started to mount, you can start to get a little bit more interest and a little bit more feel of what's happening here. We go to the daily chart and you can see we can kind of back this up and just give you a little bit of a visual and look where you're trying to mount your previous swing highs. Again, this is what we talked about previously when we were pushing to the upside. As long as you continue to mount previous highs and previous highs and previous highs, you can't really change your thesis. You have to stay bullish from that sense. So that's why I say, technically speaking, you look great. But when we look fundamentally, we don't, there's a lot of clouding in the judgment right now. And that's why I have to warn people about right now. Now, going into ES, S&P futures, you get a little bit more answers here. Now, you can also see, right, this is something really clear to see here. You're sitting basically in a giant demand that you've had. And this has been here all the way basically since back in September. You can go all the way out. We can come right back over here. Yeah, it's going to be right here on the daily time frame. And it's big. It sucks. You really hate when you have these massive supply zones because it really just creates it gets tougher to trade those areas, right? So I just wanted to clarify before I mark this out. Basically here to here. So 4,200 almost down to 41.3. You just sat in this zone and you can see the consistent rejections of this level. 1, 2, almost 3. And then we have this here where you almost broke out to the upside. So you almost invalidated that area, but you did not. You did invalidate that area on the Nasdaq, so that's worth mentioning. And you came back in this area right here, which is worth mentioning as well. So when we look at this, you're just consolidating, getting a bull flag, bouncing out lows, still look very strong. So when we look at the market, you still look really good, but you're sitting at very big levels. And like I've said, the only thing that's going to push you out of this range is going to be fundamentals. And people, when you ask, Tyler, do you think the bottom's in? Do you think CPI is going to tell you if the bottom's in? Look, if CPI reports that inflation has respiked and that we're seeing a resurgence based on what we're doing with these revisions, then I'm telling you, you're going to get some nasty volatility to the downside. But right now, there's no evidence to tell me that that's what's going to happen right now. Okay. Now, before I let you out of here, a few things we need to look at. 1, crude, oil, very important. I talked about this yesterday. Oil is just range trading. A lot of questions are coming out around oil. When we look at oil, it's very clear though. Easily range trading, 82 to 72. Back and forth, back and forth. There's nothing to talk about here. There's nothing to get worried about. Okay, what do I say though? If energy spikes out of this, it could create problems. But I will say, when we look at what's been happening with CPI reports and them dropping rapidly, it comes right back down to energy. Because basically since June, you've been on a massive steep decline. Now you're basing, now you're moving sideways, okay? Oil kind of reached a point to where it can't really go lower. Even today, we announced we're selling more of our crude reserves. And guess what happened? You got a little bit of a drop, but nothing too serious because this is becoming an issue. And we know now we have to start refilling those reserves and the price is holding its own. We look at XLE. That's why all these XLE and oil stocks are sitting damn near highs. Exxon, very high. You know, CVX, very high still. You're at range lows a little bit, but you've had a lot of volatility. And in comparison to the rest of the stock market, you're still very, very high. That's what you have to take into consideration. Some of these bonds here, TLT, you're holding on. We mentioned this in yesterday's video. You're holding on for dear life. And guess what? It's not a coincidence, in my opinion, that CPI is tomorrow while you're holding on for dear life. Because again, I think if CPI comes out bad, TLT takes a big drop and probably gets below 100 pretty quick. Looking at the yields, what are they doing? Again, stagnation near highs. You're trying to make a decision. You don't know what's going to happen here. And what this tells me too, when we look at TLT and the bonds and looking at oil and where it's all sitting right now and not making a decision, is that big money is waiting on the market. They're not trying to guess. They're not swinging huge positions. It's as simple as that. There's nothing else going on here. And so if you're trying to swing or you're like, I want to strangle and I've never strangled before, I'm telling you, you're just setting yourself up and you're gambling. And I don't really think you want to be gambling because some of you don't understand the risk that you're taking when you're gambling here. So that's my viewpoint here. Looking at the DXY, the dollar. Also, it looks like you're getting prepared. It's very similar. Everyone's talked about you have a bull flag here on DXY. You do. You try to make a bull flag. You're sitting in it. You can't break highs. Guess what? It's waiting for CPI. So what is the point of saying all this? Just sit on your hands and wait for the trend, people. I'm telling you, tomorrow, clear-cut answers. We'll have stocks to talk about. I'm not even going to cover stocks I like today because I don't even want people to be tempted to just start hammering buttons when the market opens because you have no clear decision right now. You can't even really give a good viewpoint on the Nasdaq or the SPY because they look great, but you just don't know what's going to happen with CPI. And I'm telling you, if CPI comes out bad, I promise you'll get that downside. It'll be gross. Do your own due diligence. It's not financial advice. But as always, please like, subscribe, do what you got to do. And remember, the Discord link, it's down below. If you want to get involved with us, every day we're trading. We have a lot of free information here. But take advantage of this if you want. The link is down below. Have a good one, traders.